18 months ago, Jupiter was mainly a web-only DEX aggregator on Solana that did a very fundamental job of stitching together the different very fragmented liquidity venues and DEXs and basically provide best execution and prices to users on Solana. Today, it is way more than that, right? Today, Jupiter is the largest on-chain application platform on Solana by users, by trading volume, and also by TVL.
Hey guys, Blockworks Digital Asset Summit is going to be back in New York City, March 24th through the 26th. We're going to have top speakers from leading asset managers, financial institutions, DeFi protocols, crypto companies, policymakers, you name it, everybody all under one roof. Think BlackRock, the SEC, Tether, Robinhood, Solana, and much, much more. Follow the link in today's show notes to get your tickets, and you can use code Lightspeed200 for $200 off at checkout. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hey guys, welcome back to another episode of the Lightspeed podcast. Today I am joined by Xiao-Xiao, the new president of Jupiter. Glad to have you on. How are you doing today?
Very good. How are you?
Doing great. It's, I think, great opportunity to have you I think you just mentioned to me maybe a little over a month sort of in the new role. So glad to have you on and kind of talk about, maybe your outlook coming from a little bit different of a background, like jumping into sort of the on-chain world and get your view on where things are headed, for crypto, for on-chain businesses, and for Jupiter specifically, of course. Obviously, that will be important to you in this new role. So maybe to kick things off, I think it would be great to get some detail on your background. You spent some years working in sort of institutional strategy at BCG, KKR, like some big names. What prompted you to make the leap or sort of take the jump from kind of where you were to, diving in fully to like a really on-chain org and take on this role at Jupiter?
Yeah, I think I've always liked to have new challenges in my life. I started my career actually as a professional concert pianist. Some people might know that I played for George Bush Sr. and Gorbachev and the likes. When I was a kid, performed around the world. And later on, I switched, into the world of business and strategy and finance. I worked for 8 years at Boston Consulting Group, advising for Fortune 500 companies. And back in 2016 is actually where I first fell down the crypto rabbit hole when I led one of the first projects BCG ever did in around blockchain. We were actually working with De Beers at the time, the biggest diamond producer in the world. And we actually built a blockchain-based asset tracking platform for natural diamonds at the time, permissioned. Of course, Ethereum didn't quite work back then yet. And that's how I, through the research, really fell down the rabbit hole. I think Dominic Williams at the time was our blockchain advisor who founded ICP later. But that's how I first got into the space and became really fascinated. And also my career took me into many different other areas. I built different startups and companies and startups in the Web 2. I always stayed personally very fascinated, investing into the space and working with founders in the space. And then about 5 years ago, I got headhunted by KKR to join their team in Europe, leading digital value creation in Europe, working with some of the biggest billion-dollar revenue portfolio companies that KKR essentially owned in making them essentially better. But as soon as I joined back in 2020, there was this big question of okay, crypto is coming up. What should we do as a firm, right? Should we stay out of it? Should we invest? Should we go all in? And then we spun up the task force around digital assets, which I had the privilege to lead throughout the years. And that's how I basically devised the strategy to kind of get exposure for a company like KKR, one of the largest private investment firms in the world with 700 billion AUM. And how do we not overexpose, right, a firm like KKR, but still get the optionality for the future? And so over the years, we invested. I still say we, but I helped KKR invest out of its balance sheet into great early stage asset managers in the crypto space, like Parafy, Dragonfly, Ethereal Ventures, fund led by Joe Lubin, Bitcraft, etc. Basically have like pockets of expertise, and where we were large LPs into some of these funds to kind of get insights and deal flow over time. But then also backing, a bigger institutional digital asset company like Anchorage. We led the investments in their last fundraise back then as well, with the premise of like basically bringing digital assets adoption to the institutional world. So I guess in that world, I basically had that vantage point, how to basically look at the digital assets world from the seat of someone deep in Wall Street. And I think a couple things have changed over the years, right? That in the market essentially, and that was, I think, gave me also the impetus to really like make the full-time jump. I think firstly, it's very, very clear to me that, the line between on-chain and traditional finance has been blurring, and it really accelerated in the last 12 to 24 months, right? Very clearly, Bitcoin is now a national and corporate treasury asset. It's not just, owned by whales anymore. Stablecoins really becoming a global payment and remittance rail, not only adopted by crypto companies, but also by banks, fintechs, Web2 startups. And then very clear, like you can see that in the data, on-chain trading venues are rapidly taking share from centralized exchanges. It's still like, probably 80-20 if you look at across spot and perps. But on-chain is really a significant part, and that's there's only one direction that this is going. And then very clearly that, new DeFi primitives, tokenized assets, and things like prediction markets are really reshaping the way, capital and information markets are working today, right? And then I think the second thing that has changed, and it wasn't possible really like 3 to 5 years ago, is like the technology and the infrastructure is really like growing up. And I think that the value creation that is really happening today versus even like 3 to 5 years ago is really moving from an infra level to an application level, right? Block space on L1, L2s is increasingly commoditized. It doesn't matter where you build, as long as you actually build something that people want to use. And so this new wave of on-chain applications, like Jupiter, like Hyperliquid, fully on chain, not really like CeFi, but properly DeFi, are generating significant revenues, and a lot of users are adopting it, and that's really has changed. And so in my thesis, sort of like the modes around where value is being created, it's really shifting from infrastructure towards distribution, towards brand, towards user experience. And I think all of that, I think, is underpinned by this core belief that on-chain finance is a fundamentally better way to do finance. TradFi is really huge, but it's opaque, inefficient, and it's really built around, having to trust gatekeepers like banks, asset managers, intermediaries. And I fully believe that building on-chain on crypto rails really empowers a new and over time more superior way to kind of do finance, which is open, transparent, globally accessible, centered around self-custody, self-sovereignty, and then things are simply done on a permissionless way and trustless way. And so I think I wanted to be at the front line of that shift and not watching it from the old world. And that I think was the impetus of sort of going from a very good role at KKR to kind of going fully on chain.
I think that makes a lot of sense. I think you laid it out pretty nicely there. Maybe one follow up on that. I'm curious. You do see at least, I think the point around sort of these decentralized versus maybe centralized venues, at least within crypto, we're starting to see sort of an uptake in market share for some of these decentralized venues. The perps with Hyperliquid and some of these new perps exchanges has been a good example, but also on the spot side, we've seen Solana spot volumes on chain kind of explode recently in this past year. For a few pairs at least. How do you think about, some of these centralized venues are actually thinking about coming on chain as well, right? Like Coinbase and Robinhood and some of these teams that are maybe a little bit closer.
Integrated with Jupiter. Yeah, absolutely. Yeah.
So I guess it just plays into your thought there that just they're going to have to come to you basically. It's like you wanted to be on the front lines, and so these businesses, like, they're sort of going to be forced to come where you are, where Jupiter and one of the other apps on chain already are sort of already at.
Yeah, I think look, the worlds are merging, right? I think a lot of the CeFi trading venues, they realize that they see the data, right? They see where user adoption is going, and a lot of them are adopting a strategy of they'd rather disrupt themselves a little bit, right? Building their own wallet, building their own like on-chain integrations, than basically waking up in 2 3 years and realizing that they they're not part of this at all, and that they have to do something much more radical. Um, but like for us, I would say from a Jupiter perspective, we realize that the on-chain finance world is still extremely, I mean, despite the early successes of Jupiter and Hyperliquid and Aave and so on, it's still a tiny market, right? We're just at the very, very beginning. If you really like, it's very difficult in on-chain to kind of have fully accurate, unique user numbers like you would expect in the Web 2 world. But on-chain, my estimate is like we probably have single digit millions of unique users that are active in some way, right? That translates into potentially more tens of millions of wallet addresses that are active. Um, but I mean, if you just like look at single digit millions for the entire on-chain, properly on-chain, I'm not saying CeFi, right? That I don't mean is CeFi. CeFi will have a lot more. Like Binance had probably 300 million users, a portion of that monthly active. Robinhood is around 30 million, right? And I would say proper on-chain is around single digits. So for me, there's like a 10x to 100x opportunity, right? To really grow out that market. And I'm definitely seeing very clear we're at so early that it's not about whether Jupiter or Hyperliquid or Aave, right? Like everyone is building at this future from different angles, and we want to kind of like champion this whole category and this term and this notion around on-chain finance is the way how crypto is supposed to be, right? How crypto is today is not necessarily how we wanted crypto to be, right? Like most of crypto today, the 300 400 500 million users that somehow interact with crypto, most of that is onto centralized exchanges that are offshore, maybe not regulated, but you also don't have the transparency, right, of what's actually going on. Um, and only a very tiny part of that are actually like self custody. So I think there's a big opportunity for both sides to also win, right? Like giving more value and transparency back to users, like we're doing with the USD stablecoin, for example. Moving away from these kind of like centralized gatekeeping concept and really working towards a vision where crypto, or like fully on-chain crypto, is how it's supposed to be, empowering users around the world, um, without collecting every single of like data that customers have, keeping their privacy, um, and yet everything not manual driven, not black box, but transparent and code based. And I think not all of finance will be able to kind of like transform itself into this vision, but I fully believe at the end state there should be a much more significant part of global finance that will happen on chain end to end, and there will be basically that parallel world where if you need trusted intermediaries, you need someone to kind of call and speak to, and you want to hand over your assets to someone who you happen to trust, that's fine, right? But I think like especially also with the younger demographics that are fully digital native, more and more trust will be built around brands and platforms and user experiences that are fully permissionless, that are fully on chain. And I think we want to work towards that, both from a product experience perspective, from a tech underlying infrastructure perspective, as well as from a branding, growth, marketing perspective.
Great way, I think, to segue straight into. I'd love to get your thoughts on, you're coming in, a month in or so to the role. You mentioned there some ideas around the product approach, some marketing approaches. Like, what do you think? Like, what are top priorities, top goals for you coming in and being at Jupiter in 2026? What are you thinking about, and where do you think you guys like really need to press on the gas this year?
I think I'm sure most of listeners of this podcast will be already using Jupiter. But just to level set, right? Like I think it's just also like the speed of change of the space and of a protocol like Jupiter. Like 18 months ago, Jupiter was mainly a web-only DEX aggregator on Solana that did a very fundamental job of stitching together the different very fragmented liquidity venues and DEXs and basically provide best execution and prices to users on Solana. Today, it is way more than that, right? Today, Jupiter is the largest on-chain application platform on Solana by users, by trading volume, and also by TVL, right? And I would kind of think when I looked at Jupiter outside in before I joined, I really thought of it as kind of a Robin Hood, but fully on chain, and probably pre-COVID, right? If you think about what Robin Hood was pre-COVID, it had a very loyal retail use base that primarily traded long tail meme stocks, right? And around this core, right? Obviously during COVID, that took off, but with basically that adoption, they kept building adjacent products, right? That fed into this flywheel of, not only can you do your meme stocks, but you can do a whole bunch of other financial activities also on the app, right? And so very important for us was that sort of building out this super chain, the super app thesis into the reality today. So I would say today Jupiter is probably the cleanest and most comprehensive expression of application adoption and activity on chain, and especially on Solana, of course, right? Because we're almost like in every market or segment or like whatever you can imagine you can do on chain in a financial way, Jupiter offers something. And in that distribution and that aggregation of demand, I think ultimately is also like what is very attractive, right? For someone like Coinbase, even Uniswap, right? And Robinhood, ultimately they want to integrate with that because that's sort of the one-stop distribution layer that we have, and we have aggregated the liquidity, we have aggregated the demand, and we're the sort of most full stack sort of on-chain user layer essentially. And today, I think just a level set, right? 2025, Jupiter did over $1 trillion in annual trading volume across spot and perps. We generated hundreds of millions of fees. We distributed hundreds of millions of fees back to liquidity providers. And then out of the remaining sort of net revenues that we generated, around half of that goes into buying back the tokens as well. So that's sort of the current state. We are probably the most diversified on-chain businesses out there, with I think now 12 revenue generating product and business lines. And we're basically building a growing and virtuous flywheel for users, liquidity providers, token holders, and partners. We have over 300 partner integrations into our tech stack via APIs. As mentioned, we generated hundreds of millions of revenues for our partners. And we want to make it also like as easy as possible for developers and other projects to integrate into the Jupiter API to kind of benefit from this whole super app sort of thesis, right? Not just on the front end, but also really full stack, right? We also, by the way, one of the largest Solana validators now, because we realized it was important to be able to control the user experience. We had to also own the underlying infrastructure, the RPC and the validator as well. So we spun up a team and over a short amount of time, we also like became a very, very relevant sort of infrastructure player in the ecosystem. So that's I think the today, right? I think your question was about how to go from there, and then obviously people might already know, right? Nobody ships like Jupiter, so every day if you go onto our I'm overwhelmed today. Just every day there's so many new things that our product teams are building and shipping and announcing, right? Every single day, literally. But if I sort of aggregate that towards sort of onto a more strategic level, I would say the growth factors going ahead is, I'd like to always think about what are the 10x opportunities, right? We're already one of the largest, on Solana on chain, but how do we actually get to 10x, right? This, and I would say there's probably 4 and 5 angles to think about it. One is, I would say most of our users and wallets today are interacting with us via desktop. That's the way how treasures today kind of interact, right? That's where most of our functionalities are. But I think in order to really like onboard and onboard the masses beyond just a sort of smaller crypto bubble, we are really pushing very hard mobile, right? The mobile app as kind of the main delivery mechanism to onboard the masses and create synergies across existing product wheel, right? So we now have launched the mobile V3. We're gonna shortly launch a mobile V4, much more focused on a sort of traditional retail audience, not just sort of super DeFi users. And stuff like perps today is not app native, but we will bring in app native. I think that will be just like that's low hanging fruit, right? That will simply have to do. And we want to be simply like much cheaper and much faster than the existing mobile app alternatives on Solana. And we're already there today, and we can see in the numbers that we're like taking share, right, from a low base, but taking share quickly. So that's number one. Number two, I think it's onboarding, as we mentioned before, onboarding new user groups via strategic partnership integrations. We have built the most advanced trading engine on Solana, right? Like most of the trading activity routes through Jupiter. And so why don't we make that available for big platforms that are not today native on Solana or even in crypto, right? Fully on chain. And so an announcement I'm sure people have seen, right? Robinhood is integrated with Jupiter. Uniswap is integrated with Jupiter. Coinbase, we announced, I think, a couple of weeks ago, and Anchorage as well, right? Because we want to also like offer more institutional audience that have their assets, crypto assets, with qualified custodians. But if some of them also want to have access to kind of on-chain trading activities and on-chain lending and borrowing activities, like we want to have that integration, and we want to make that available also to the institutional audience. So I think there's definitely also like a 10x opportunity. We can do a lot more. There's a lot more names that we can sort of work with. And then the third one is what we already anyway do, right? New product launches that basically tap into the new addressable markets and potentially can bring new sources of fees and revenues. Prediction markets we already built out. I think 2 weeks ago we launched the Jup USD, right? And this is really not thought as a revenue line, because we really want to simply build the best on-chain native stablecoins, and we want to give the value back to the ecosystem and not like centralized, stablecoin issuers just keep all of the yield for their own sort of profit books. We want to grow the entire ecosystem. We want to sort of give that value back to our ecosystem, to our users and distribution partners. Number 4, I think if you really think about constraints today of on-chain, it's really about bridging on-chain to the real world or traditional finance, if you want. So we have a team also like building what we call Jupiter Global, which is essentially a payment stack where we want to basically create best pricing on ramp, routing, payment cards, seamless QR payments, especially in emerging markets, to not basically having to kind of pay, fees to card networks or intermediaries directly with QR. I think that will be very differentiated. And then obviously authentication, we want to have Jupiter ID across Web 2 and Web 3. So to really like onboard people into like having our on-chain assets and having real world utility is something that we think very hard and very long about. And so in the coming weeks and months, we'll release a number of very exciting functionalities that will simply give you a lot more also options and utility of holding and using your assets that you anyway already have in your Jupiter wallet. And then I think the final one, I think just theoretically, conceptually, today we're the largest super app on Solana. But for the normie user, right, that is also uses Robinhood and now may try out Jupiter, he or she doesn't care about Solana ultimately, right? Or on which L1, L2 things are being settled on, right? Like also if I send a bank transfer to you, I don't care if it's underlying settlements or Swift or something else. I just care it arrives cheap, fast, and I understand what's going on basically, right? And then so I think omni-chain execution is also something that we have been working on, right? Like really being able to offer assets across chain, all assets is something that I think will 10x the user experience. There's different ways how you can sort of achieve it. It's a very hard technical problem, but our team is also working very hard on that. So I would say these are the five very different growth vectors that I think you have to hit on all of them in order to really get to like 10x and beyond growth. But I think if there's one team in on-chain finance, it's probably the Jupiter team, because the full stack capabilities, product, UX, and underlying infrastructure, you need to be able to do all of that to crack some of these very hard problems.
Great overview there. A lot of stuff, a lot of points to double click into potentially. One I think I want to maybe jump into is the stablecoin. Obviously, stablecoins, they've been a big, talking point. People within TradFi are like getting more interested. There's more eyes there. There's obviously legislation, in the US that's, there's some pending details around how stablecoins might be treated kind of going forward. How are you thinking about like what we've seen emerge within the space is that more and more platforms, and now Jupe is one of them, are going after this like white label stablecoin approach. And then, you can kind of decide to, hey, maybe we give some of the yield back to our users, maybe we keep some of it for revenue purposes, bunch of different approaches. But are we really entering this world where, every platform is going to have their own stablecoin, kind of maybe in a similar way to a lot of the financial platforms today, like fintech apps? You go in and you have a means to save some cash there, and maybe they give you some yield via a cash sweep product or something along those lines. Is that sort of an inevitable future, you think, where we've got thousands of stablecoins because every platform's got one, and it's just the way to go?
Yeah, I think there's two forces, right, that are a little bit against each other. There's, first of all, very strong network effects on the existing sort of stablecoin networks. That's why Tether and Circle are just so strong, and the distribution they've built is very hard to kind of displace. But I also think, I believe the end target state is inevitable, that we'll get into a world where there will be almost like an infinite number of stablecoins. And it just makes sense for different platforms, even countries, first of all, and platforms on the other hand side, to launch their own stablecoins, because it makes so much sense, right? To kind of like better control like the ability to kind of issue stablecoins, and having the ability to decide what to do with the value that's been created, right? On top of that, I think it's very clear, right? And if we just look at the numbers, I'm sure people are familiar with it, like 300 billion of total supply in stable coins, probably 30 trillion of transaction volumes, which makes it already today more than Visa or MasterCard, and it's only going up, right, from here. But despite that, only a very small part of that 300 billion of supply actually returns any value to kind of users, or if at all, right? And so the centralized stablecoin issuers are making north of 10 billion of net profits per year, probably more, right? So that's, if you run the numbers, roughly a 3%, so makes sense, right? Roughly 3 to 4% of the total supply, right, of T-bill yields. That checks out. That is basically being kept in the books as profits of the issuers. And so theoretically and conceptually doesn't make sense, right? There's obviously different ways. Banks obviously think very long and hard about it. They feel very much threatened if this yield is going back to users, because it resembles deposits. But there's like all kinds of innovative ways how you can basically experiment about giving this value back, right? Not necessarily directly as yield, that doesn't work. But how we basically, these were some of the principles, right? How we kind of designed DrupeUSD, and we're very committed in experimenting and innovating this in a way to kind of solve this major flaw in the current stablecoin market. We want that value essentially to flow back to our users, to the ecosystem, and that flywheel of usage within our ecosystem, right? And so I think today, if you deposit the DrupeUSD into Jupiter Lend, which was a lending borrow protocol, like DrupeUSD will simply receive additional rewards that are come from, including a significant portion of the yield from the underlying BlackRock tokenized T-bills. But then over time, that composability of a DeFi first stablecoins will also really come into play. We're very excited to kind of offer some very innovative mechanisms to our users. For example, like it's just brainstorming, it's not yet live, but some of the stuff is like, you can keep basically the JUPUSD, the tokenized version of your JUPUSD in the lending protocol. But then while you're doing a prediction markets bet or a limit order, very often normally you would have to pull whatever your assets are from any lending, vault or mechanism, and you have to kind of submit that order. And if you set a very low order, you might wait a couple of weeks, right, or a couple of months until the order gets triggered, if at all. But in that time, you actually don't get any yield, right? But we want to make it in a way like if you kind of submit the order in JUPUSD and you already have JUPUSD deposited into the lending protocol to earn yield, we can make it in a way like just you kind of directly submit the order, the limit order with the JL JUPUSD. We need to find a better name for that, but the tokenized version of that receipt token. And then until that order is triggered or the prediction market bet is actually cashed in, you will keep earning yield via the lending protocol, right? So some of these things just seems to make sense from our perspective, from a user perspective, but it's just the way the current crypto market is designed. You cannot do that, right? But we want to basically like do some of that with our own, and we can only do that if we have our own stablecoin, right? We cannot do that with a different one, because otherwise we cannot design these intricacies in a certain way that benefits the users ultimately.
Yeah, those are great points. I think that speaks to some of the sort of platform synergies that you hinted at trying to go after for users. One of the other big points that you jumped on was mobile, the focus on mobile, Jupiter Mobile, getting more users onboarded onto that. I guess, how are you and the team thinking about the approach there? I feel like within crypto, oftentimes the marketing does not extend much beyond the token's out, here's the airdrop, come use our protocol, or like the points are up, come use the protocol. How are you thinking about getting onboarding new users to mobile?
Yeah, I think mobile is, as mentioned, super critical. I think we started the mobile native journey relatively late, but it's also very clear to us that this is kind of one of the major delivery mechanisms that we have to kind of onboard people outside of crypto. Having said that, there's still a lot of homework that our team is catching up on. So today, we've been basically running this 21 day. We're still in the middle of that mobile V3, 21 a day. We call it the Trencher R campaign, that basically introduced 21 new features in as many days, culminating in a full-scale public release on January 22nd. And we want to first establish Jupiter as the true one-stop shop for on-chain crypto, but vertically integrating every essential financial service. Price discovery, most people already use us for that, but also analytics, your terminal needs, and then execution, right, into a single super app interface. And we want to remove the traditional friction of decentralized finance and offer like institutional grade tools like Shadow Lane for sub-second speeds, prediction execution for slippage reduction, and some of that. And over time, we will also introduce, inclusion of gasless transactions, which I think will be very important to kind of onboard, new users that are not used to kind of keep some Solana for gas transactions. It's like just one additional step, right? That we need to kind of abstract away, and then much more better integrate, I think, JUPUSD stablecoin into the overall experience, as well as things like perps, right? The perps today is not yet app native, but like just all of these things, I think, are happening today. Today, I believe we're already the strongest and the best, execution on amongst mobile apps within just Solana on chain, but it's still addressed to kind of a power user segment. I think what we will like after we completed the V3, the focus would very quickly shift, is already shifting towards the V4, which will be much more focused on normie users, right? So we have to think about how people who don't have a lot of on-chain experience or assets, how would they actually interact with the app? What would they need to do? I believe we have to kind of simplify the overall experience as well as making a lot of the things that we already have on the desktop much more app native in a simplified way. and then continue to kind of do the things that I mentioned, returning as much, value as possible to the users with the likes of DruPSD. But I think overall mobile is a very big push. By the way, what I mentioned around the Jupyter Global, the payment stack that will be launched in the coming weeks as well, that will be also like on the obviously mobile first, right? Because it doesn't make like any payment use case doesn't make sense on desktop. So it's primarily mobile experience. And so for us, very important to kind of integrate also those, because this will extend much more into everyday use cases, right? Not just swapping and, you know, doing your leverage perp trade, etc. But it's actually, I have assets, I have made money from my trades. Now, what do I do with it, right? I can pay for my phone noodles in Vietnam on a QR code. That would be very cool, as well as paying in the mall in Dubai or New York, right? I think removing these kind of barriers, these historical barriers of what you can and cannot do with your on-chain assets, is a very exciting sort of product engineering user experience challenge that we like to set ourselves.
I think that's a great point. I guess maybe another area, and I don't know that you've mentioned this one specifically, but when I think about sort of the on-chain super app idea, and some of the things that teams within the space and even within the fintech space have focused on from a product perspective, like crypto cards have become something of a push lately. Like a lot of teams getting into the kind of like crypto debit and credit card space. And if is that something that Jupiter is thinking about as well, or is that Jupiter Global
Yeah,
payment product like kind of in that? You think that fits in that bucket basically?
yeah, it will be one of the core pillars of Jupyter. I don't want to kind of, our payment lead will kill me, but I won't share too much alpha. But I have the beta version, right? So I already pay a lot of stuff. Card, it is coming and it's gonna be awesome. I can't wait to kind of like, show more people and tell more people about what we have sort of worked out there. Um, but yeah, fully agree. Stablecoin cards is one of the largest sort of growing areas, right? And I think there's like a lot of different players, both legacy Web2 as well as on-chain native, that are sort of vying for market share and user adoption. And I think it's very healthy, right? Because competition will, um, you know, drive down costs and increase user benefits. And the more user benefits there are, the better the adoption curve will be. And so we want to kind of contribute our part to that equation, leveraging our, full stack on-chain capabilities and powers to kind of build the best possible on-chain native way to kind of do it. I'm sure that very large, the Revoluts of the world, they're looking at it as well. They want to explore stablecoin rails to kind of lower their costs base and ultimately pass that on to users. But I think there's no one single truth, and there will be like very, very exciting innovation that will come. We are quite committed to kind of really experiment that and to give the best experience not only for the user in the US and developed markets, but we also like, because our roots are Southeast Asia, etc. We really also think about it from a global perspective, from emerging markets, and how can we actually return more financial utility and value to the unbanked, for example, or the people who don't traditionally have access to traditional finance or banking infrastructure, merchants as well as users. And so we're very excited about stuff around QR payments. I think that's probably not a focus for some of the players that are in more developed markets. But in that vein, we want to kind of like, we like to do things that others are not doing, right? And things that are others doing are very often just, table stakes that they will also have and offer, but we'll always come up with something that is just a bit different.
Love that. I think maybe if we pivot a little bit into kind of like your thoughts on the future of the space, where things are going. I think an interesting, like Jupiter, I think for a long time has benefited from being in sort of this central position within Solana, as starting off as the aggregator, and the landscape, the sort of microstructure of the markets on Solana have kind of evolved around that as a result. And so now when you see things like stock tokens coming on chain, and like a variety of these other assets getting tokenized and coming on chain and being traded on Solana, obviously the activity, it gets routed through Jupiter. Do you guys have to play a role in thinking about if there's X stocks and there's R stocks and there's Y stocks, right? Like there's kind of a bunch of different teams that are trying to solve for some of these assets, and maybe how you showcase that on sort of the front end of Jupiter to your user, to make things kind of seamless and not confusing for them. Is that like a problem that you're thinking about, just in terms of there's like various, if I think about the tokenized stock thing specifically, there's various platforms doing that, and you've got kind of a variety of like same tickers but different maybe prefix, where you have like R SPY, X SPY, Y SPY. How are you guys thinking about that? Is that challenging to work around?
No, not at all. I think tokenization is obviously one of the, I would say, biggest longer term growth drivers for the entire industry, right? I think stablecoins is the cleanest expression of the highest product market fit of a tokenized assets. That is just perfect for tokenization, and clearly has product market fit. But obviously, if you think for fiat money, right, there's like a bunch of other potentially very large asset classes that are in the process of being tokenized. Equity is like, of course, like everyone wants to figure that out, but also like credit, I think is probably even more suitable to tokenization than equity. It's more standardized, it's more liquid in a way, more unified as well. It's a very large market. I think stuff like real estate, etc. This will take a lot longer, because it's so unique. Every single asset is so unique. It's not standardized. But since you mentioned tokenized equity, of course, we welcome any asset issuers or asset tokenizer, right? Because the more assets become tokenized in any way, and there's more competition amongst tokenized assets, the more the whole space will evolve, because we have to actually think about not just, I think the supply side of asset tokenization is the easier part, right? Because yes, we have to work through the technical challenge, the compliance challenges, the how do you deal with redemptions, right? If it's more private, credit funds or so. But I believe a lot of these challenges are technical in nature that we can solve, right? And we can work together. We're very happy to work together with large issuers and tokenization companies to kind of bring them, make them available on chain, on Solana, right? The more supply goes on Solana, the more we can do with it, right? But I think Jupiter, we want to position ourselves as the distribution, the demand layer in the end, right? Because as long as we build the best user experience for anything on chain, right? The super app on chain, we want to kind of offer more breadth and more variety and more great financial products that are permissionless in nature and on chain, right, to our users. And the more supply there is, the more diversified nature there is. We will always be that a major part of that distribution layer, and we want to kind of stay that way. But having said that, I think there's still a few core issues around tokenized equities that have to be solved, right? A lot of the tokenized stocks today are not really tokenized stocks, but they're derivatives of the pricing of the stock in some sense. A lot of the dividend rights or governance rights are not really passed on to the holders of the tokenized version of that. I believe it's not something that we will solve in the next 1 or 2 years, and not a problem to solve for the single player like Jupiter or a tokenized or an issuer. Really, I think that there needs to be a much more holistic effort around finding a way to fully build capital formation end to end on chain, right? So not just take something that is already listed on an off chain exchange, and then trying to come up with a separate liquidity pool and derivative that just mirrors what happens in the main liquidity venue. But I think it's much more exciting if we can get to a world where real businesses with real adoption and cash flows actually IPO on chain, right? Fully IPO on chain, and everything around the company, the dividends rights and governance, can be fully designed in a way that works with on chain, and the main liquidity venue is then also on chain, and then we can build the demand side and the supply side properly on chain, right? I believe as long as we're always this like, much more smaller, version of on-chain, the user experience just will never get to a way where the on-chain version will properly rival off-chain. But I think if we really want to do it in a way, we have to kind of like think more end to end. It would take longer, but I think it's ultimately the more exciting and the bigger way to kind of like do it end to end.
Does that inform, you talk through some of there's technical challenges there, there's probably some regulatory challenges there. Does that inform, maybe from your speaking to your experience, sort of on more of the institutional side? Obviously you've been, you mentioned, sort of investing in some crypto focused funds, for years now. What are some of the biggest friction points, maybe from your POV, that are stopping today still some of the larger, if it's TradFi firms or just businesses that could or maybe should come on chain for the benefits? Like, what's stopping like larger amounts of capital from just jumping into DeFi today? Is it still technical challenges? Is it regulatory? Is it a combination, or something else?
I think a confluence of many factors, right? I would probably say, well, awareness and education is always a blocker, right? Simply if the awareness and if the understanding is not even there, what is happening, that's always a blocker. But I think like a lot of institutions, I mean, we have great folks like Christine at Apollo, right? Sandy at Franklin Templeton. There's like a lot of these champions now within these companies. I used to be one of those, that are sort of fighting the good fight and, raising the awareness and explaining the benefits of what is already possible. But I think, that aside, obviously KYC, being permission versus permissionless is always like a big, it's a big debate, and it's a threshold, let's put it that way. But I think there are workable design choices you can think. I mean, there's the innovation that's also happening. It's not static, right? And there are you could think about ZK ways to kind of do KYC that, is somehow compatible with DeFi on-chain ethos, as well as the strict requirements of KYC of an institution, right, and the compliance departments. But ultimately, I think some of these are also solvable. And then obviously the regulatory side, there's a lot of movements as well. I think having more clarity will simply make it easier for institutions to make a decision whether they participate or not, and not being stuck in that gray zone of maybe, but we're scared. We don't quite know. So regulatory clarity will help. On KYC, I think there will be technical solutions. Hopefully, we are working on some of those as well. And then there's like more technical things that simply have to work out. If you want to bring like a tokenized credit fund on chain, what are the minimums? How do you distribute that? What are the redemption mechanisms, etc. Right? Because in a TradFi world, it's simply different realities, right? Transfer agents and whatever, the costs can be prohibitive, but in DeFi it can be almost like a toggle, right? how you do that, but nobody has built that, so you would have to kind of like build it. And then, as I mentioned, I think that the ultimately institutions are also like businesses. They're great business people, otherwise they wouldn't be where they are. And so for great business people, I always believe you got to just show them demand. If you have demand, at scale, a lot of things can be overcome, especially when you're dealing with business people and capitalists. And I think in DeFi and on-chain, we are getting through that. We're getting through that inflection point where, the demand is undeniable, but it's still tiny, and I think it's a good place to be in, because you still have growth ahead of you. You have a bunch of challenges that you have to solve. Um, but you're still like, yeah, you're kind of like the Star Wars Jedi Rebellion, and there's like the Dark Empire. Um, you shouldn't succeed, but I think it's exciting to kind of be on that part and trying to kind of make it exist and fighting the good fight.
I love that answer. I think I would definitely agree with the sentiment. I think seeing more and more. I don't know, just the discussion, at least within the from a U.S. centric view, for example, regulators in the current admin have become more favorable, and you see more and more kind of talk from larger maybe TradFi firms. And so I think that is like you say, probably pushing the backs of a lot of people maybe still within the space or building within crypto on chain. Um, to fight a little bit harder to say, hey, we really need to have a great outcome here, so we don't get maybe disintermediated in the future or something along those lines. So uh, pushing along the whole industry, I guess I would say. Maybe just to bring it back to Jupiter, I kind of want to close things out here with your forward-looking view, just in terms of like, how are you measuring success for Jupiter as a business going forward? What are some of the core metrics you're tracking or thinking about, and where do you want to see things? If we were to sit down again in a year from now, where would you want to see metrics compared to today be at in 1 year? Or maybe if you want to think further out, 18 months, 36 months, however you want to think about the time.
Yeah, look, I think I mentioned the growth areas. I think, metrics or however you want to define success will be along these lines, right? So on mobile adoption is something that will look, because mobile, the other thing that's good about mobile is it's much easier to kind of attribute it to users, right? You can actually see where the download has happened in the App Store. As Onchain Wallet, you cannot even do that, right? So, like from a growth perspective, it's actually much better to kind of think about mobile usage for an attribution sort of purpose. So mobile adoption, mobile retention will be key. Um, and then I think on the sort of integration part, that's somewhat almost like a BD game. That is just we need to kind of just have had all of these conversations. There will be a funnel, and then the most compatible ones we will integrate over time. And I think really I want to create that alliance of like-minded sort of on-chain finance champions, whether they are like in TradFi or Legacy in Web2 or in Web3 outside of Solana. We want to kind of be connected to all of them. New product launches, I think that will be measured alongside just whatever the right metric is, right? I think the one thing that people I feel in the space are a little bit overly hanged. They hang their hats always on sort of some kind of revenue numbers, right? So either in crypto you have no revenues, right? You have no ability to monetize, right? It's just like all hot air. Or like people just overly hang up on, okay, how do we monetize? Like how can we squeeze users to the maximum, right? Like Hyperliquid or whatever, right? But like if you're like such an early industry, you shouldn't think about revenue monetization too hard, right? It's good to have this as a sort of good metric to see, like, do you have product fit or not? But if you're still growing fast, you're trying to kind of drive adoption in new markets, you should always go for growth first, right? That's the playbook also in Web2. And like great companies have shown it again and again. Amazon didn't monetize like decades into its journey, right? It really built out the flywheel on the product, the user experience, the retention, right? Before you actually maximize for revenue. So I feel like Jupiter is probably today somewhere in between, right? We have, monetization on some of the products that we have. On others, we will be just pushing very hard, like TrueBSD. We will not measure that, for a long time in terms of revenue contribution, because we want to give back the value, right? And then for others, yeah, we'll have to. It's always at some point a product decision. Do you go for like just growth and distribution, or do you go more for monetization, right? And that depends a little bit on the market maturity, and have you exhausted the channels that you can sort of grow into, right? Partnerships around prediction markets or whatever. So I think there's no easy answer there, but there will be different adoption metrics for different products that we launch. For stablecoin will be different than for prediction markets or like something new that we cannot talk about yet. But I think that's sort of case by case. On the Jupiter Global and payment, I also think if you look at Binance or OKX, etc., right, they also have payment products historically, and that has never been sort of a large sort of profit center in a way. It's always like more thought of like retention, about bringing more utility, right? A lifetime value, right? To kind of use it as opposed to kind of pure profit generator. So I believe we want to also think about it in that way, more adoption and how much, utility we bring to our users. And then finally, I think, once we think about omni-chain execution, that like we don't even know, right? Because it's never been done before. It's very exciting. I think we're still like much more focused on the technical design choices and how to make it happen in what form, than how to kind of like even monetize that. That's not even sort of right now to top of our mind. But of course, like once that happens, we want to always think about it from a user adoption perspective, user experience, right? How can we simply make it easier, remove friction, right, for users on our app? Ultimately, I think everything added together is just adoption on the super app, right? Full stack. It'll be mobile, desktop, developer APIs. Those are the main channels. And since we're on chain, it will be always global day one. We want to serve the unbanked in emerging markets as well as the, sophisticated trader in developed markets. And we want to kind of just build out more and more experiences and products that fulfill a bigger part of the financial life of those people. And then we want to also bring more real world utility. I think it's a lot of those is not easily packed into single KPIs. But ultimately, I think you'll feel if things are starting to click. You see how people just naturally adopt something that is just simply working better than traditional alternatives. I love going around, right? I know a lot of folks in TradFi, but I love going around to some of them and just like sending them some Solana on via the Jupiter app. We have a magic link QR code, so no seed phrase. We try to abstract away a lot of those, and then I love seeing their reaction, right? Of like, the whole onboarding takes less than 10 seconds. You can log in with your Google account. You don't have to create a seed phrase or whatever. You don't have to manage that. Everything we try to do with QR codes already today. So when you send someone something, it's just QR code, scan with the camera. And that is just like, I see in their eyes, right? This is like, it looks a little bit like magic today, how you can basically get in sub-second finality and settlement. I send you something, it's click send, and then you just refresh and it's there, right? It doesn't work in banking infrastructure. It doesn't work on Revolut. It doesn't work on Binance even, right? But it's possible on Jupiter, on Solana. So I love that. And I think that's what we're working towards, to continue create those delightful moments for users and just showing them, right? Not explaining in long blog posts or whatever, just real world experience, right? It's faster, it's cheaper. There shouldn't be a reason to kind of not use it. And on the stuff that is not there yet, we're gonna work hard to kind of like make it even better on ramp, on real world payments, etc. To kind of add more value and utility to kind of this on-chain user experience. And then we want to kind of build in the open together with the industry, right? We don't want to kind of just do everything ourselves. We want to integrate with great partners that have users that have something interesting tech, right? So we're always like open for that. And a lot of our stuff that we build is in the open. It's open code bases, API integrations, permissionless. So that's the beauty.
Ship fast and grow. I think those are the main two things I got from you. Is put out a bunch of features, give users the products they want, and onboard a ton of new folks to the Onchain Super App.
Good summary.
It was great to have you on, Xiao-Xiao. Thanks so much for joining me here on Lightspeed. Wishing you the best of luck in the new role at Jupiter. I think from your experience and the conversation today, I mean, I think I'm rooting for you. So best of luck, and maybe we will have to have that follow up, a year, 16 months from now, and see kind of then to now, and see what that growth trajectory looked like after the fact.
Very happy to. Thank you, Danny. Take care.
Thanks so much for coming on, and for all the listeners out there, we will catch you next time.